Hey everybody, it's Paul here on my channel, Better Call Paul, and today I have a special guest with me, my good friend Michael from his channel, My Retirement Trading. How you doing, Michael?
I'm doing great. How are you doing today, Paul?
Oh, I'm doing fantastic, and I brought Michael on the channel because I want to talk to him today about his four, now five horsemen. Michael, what are you, 55?
I am 55. That's
So
right.
Michael's 55. I'm going to be 53 tomorrow. So we're pretty close in age. And, Michael's working on building up his portfolio so he can hopefully retire sooner than later. So we're going to go through some of his ETFs and he's going to explain why he holds each one of them. And then we're going to go through some of the performance analytics as well. So I'm going to share my screen. The first one is OVL. So, Michael, why don't you just give us a brief description of OVL?
Well, I'm going to go a little background on this. I was actually on my YouTube channel, to My Retirement Trading. I had a viewer, and they made a comment, and they said they were buying OVL. I had never heard of it before. And so I researched it, because I don't take that lightly. And I was actually like blown away by OVL immediately. And I was so blown away by it that I put 150,000 American dollars in it.
Wow.
So yeah, and it's one of my favorite. It's based on the S&P 500, and they almost have 100% exposure to Vanguard VU, which is my largest holding of all times. And so they sell a put spread strategy on that, and they're targeted at about a 10.5% distribution rate. And this one's, like I said, based on the S&P, and it's definitely one of my core positions. And of the four horsemen, it is the only one that is an S&P 500 based.
I was gonna ask you about that, Michael. I was gonna ask you about that. All right, well, we'll move on to the next one. Here we are. We got sorry guys, that took me a bit. Goldman Sachs. This is the Nasdaq 100 Premium Income ETF. I think most people know this one with the ticker GPIQ, GPIC. So how come you like
Yeah,
this one?
this one's based on the Nasdaq, and I believe I have 150,000 in this one also. And it's actually, like, they're all my favorites, I guess, because this is one of my favorites. It doesn't pay quite as much as some of the other ones as far as distribution rates, but I'll share a chart later on showing you that how well it's done in price change and total return. And since it's been, I believe it's been out since October of 23, and they got a low expense ratio and everything, and it's actually one of my favorites. So
Yeah,
definitely.
I think for a long time this was probably the gold standard in terms of income funds. So, no pun intended, Michael. The gold standard.
Yeah, and they actually just, I believe Goldman Sachs actually just bought out Neos, or they got acquired Neos. So
That's right. Now this one's one of my favorites. I don't have TDAC anymore. I switched it to their leveraged version TDACs, but you're still holding TDAC, right?
oh yeah, absolutely. I'm a big believer in Tap Alpha, and I bought this for the first time when I was on vacation in September 4th, 2025. I was on vacation in Boca Raton, Florida, and I bought it from the hotel room. And I like T-Spy as well, which is their S&P 500 version.
Yep.
So I ended up buying this TDAC based on that. And then I kept buying it just over and over. And this is actually my largest passive income investing position. And it's because of that distribution rate. You see that down there, 17.5%. So
Yeah, it's pretty incredible.
it's one of my favorites. It's consistent, and I can't say enough good things about it for sure.
So TDAC, do you buy this one as well as GPIC because of the distribution rate? This one's going to give you a little bit more income.
Right. And actually, I hold more of this than GPIC in my taxable account, because I may try to live off that, and I want that 17% distribution rate versus, say, like a 10%. Even though 10% is fantastic, but 17.5% is even better.
I'm assuming that Goldman Sachs is using a normal, like a vanilla type covered call strategy with GPIC.
I'm kind of vague on that, but I don't believe they invest everything. Like, maybe only on part of their portfolio.
Probably. probably. But anyways, just
That's what I'm
for people
guessing.
who don't know, Tap Alpha is using a 0 days to expire strategy with TDAC, and it seems to be doing really well so far.
Yeah, and Sai Katera, the fund manager and founder and CEO, he's got good energy and everything. And I've talked to him before, and it was a great interview. And I know you've had him on your channel before. And I like the CEO and I like the funds, so that's why I'm in this one.
I'm actually impressed. It's already at 313 million in assets under management, which is really good for a small company like Tap Alpha.
Oh yeah, definitely. And I'm assuming that's going to grow into $1 billion or better over time.
Yeah.
Okay, this was my one of my original four horsemen. This is QQQI. It's got a distribution rate of 14%. You see that right there? And I've had this since like June of 2024, and it's very consistent. And only reason I've been like trimming it lately is because of the leverage version. And this thing pays about 60 cents a month recently. I believe 65 cents the last payment per share. So I like that. I like the income off of it. And then the last one's going to be I'm counting the XQQI and the QQQI as one horseman,
Right.
since they're basically the same thing, except one's leveraged.
I notice here, Michael, it says award winner ETF 2025 best new active ETF, which is pretty impressive.
Yeah, that's definitely impressive for sure. I mean, it's actually, any of the funds we've talked about, if I just got stuck owning any of them, and I couldn't buy nothing else, I would be good with that.
Yeah, for sure. All right, you kind of gave away the last fund, but we'll bring it up anyways, just so everybody can see it. This one I'm pretty new to this one. I saw it in a video only, I think, last week.
All right. Well, at 21.19% distribution rate right there. And the last payment, I believe, was 82 cents a share.
Wow.
And so.
And this pays monthly.
Monthly, yeah. So this is actually, TDAC pays me the most, and I believe this one pays the second most in my cash account. So taxable cash account. So
this is just QQQI, but with leverage. Right.
That's the way I understand it. It's pretty much the gist of it. I mean, there might be some fine nuances to it, but that's.
Do you know how much leverage they're using?
I believe up to 50%.
Okay.
So.
All right. So now that we've kind of introduced your 5 or your 4.5 horsemen, why don't you bring up your stock analysis? And we'll go over some of the performance metrics of these funds to show people exactly why you're invested in them. And I'm invested in TDACs, but I'm thinking about adding one of these to my portfolio as well.
All right. So we're going to start off with OVL by Liquid Strategies. And what I like about this one, this has been around for a long time. Let me get over here where I can right here. Is it moving and everything?
Yep.
Okay. So anyway, I'm over here and it says the overlay shares large cap equity ETF OVL. And I'm at stockanalysis.com, and it's a great tool to do comparisons on ETFs and stocks and everything. But look at this right here. Since the fund's inception, the average annual return has been 17.16%, according to this. And what's impressive about this, a lot of these covered calls, this is not a covered call strategy. This is a put spread strategy. But if you go since it's been out, this came out in September 30th of 2019, and it's been going up and to the right. And if you go over here to the holdings, right here, Vanguard VU, 99.89%. So that is one of the reasons that I own this, because I love VU. And if you compare it to the VU right here, and this is since inception, it actually has outperformed VU 203.5% to 185.52% in total return.
Wow.
So this is, like I said, this is my S&P 500 play as far as income funds right now.
Right.
Especially with that amount of money that I have in it. So that's one of them. And then the second one you covered, GPIQ by Goldman Sachs, right here. And if you look at the history here, since inception, 26.81%.
Wow.
Now, it's been out a shorter period of time, but I want to show that. I'm not going to compare it to anything, but, well, maybe I will, but since right here, October of 23, in total return, it's 95.75%, but the market has been on a big run, in recent, years.
Yeah.
But if you take and just change the price change, you could have spent all those distributions and still made 46.54% on your money, according to this. So this is one of my favorites for that reason. And it almost doubled in less than 3 years. So that's why it's one of the 4 horsemen for sure.
Yeah, that's amazing.
The next one you covered was TDAC, and it's coming up on its 1-year anniversary, but it hasn't been out a year yet, so they're not going to show that on here because of that. But it's been, let me compare it like this. It's all over the place because of the market's been down and up, but that's in price change. Let's go to total return. It hasn't even been out a year, and it's got a total return of 25.43%.
Yeah, that's amazing. How does it compare to GPIQ just in the short time that it's been out?
Let's see right there. I believe they're pretty close.
Yeah.
And
yeah, they're pretty close, neck and neck.
As a close on Friday, TDAC was barely outperforming it, but I own them both for different reasons,
Yep.
But
I think it's impressive that Cy Kater has been able to create this fund that can keep up with GPIQ or even outperform it a little bit.
Yeah, no, he's been doing fantastic for sure.
Especially with that higher distribution, because sometimes you get a higher distribution, you end up with less share price appreciation and a lower total return.
Absolutely. So then the next one that we talked about was QQQI, and it's been out since January of 2024, according to this. And in total return, it's got an average annual return of 19.22%, which is incredible. And you can see that it's going upward still. And we'll compare, I'm going to put it in a comparison chart. Since it's been out in total return, it's had 57.26%. That's what a covered call strategy, and that's their yield's about 14%.
Wow.
Distribution. So that's one of mine as well that I've had.
That's another great fund.
Oh yeah, absolutely. And then this last one that you talked about was XQQI, and it hasn't been out that long, but what I like about it, I'm going to show you in a second. It's basically it says right here that it came out in January of 2026. So if we can compare it to QQQI right here, and in that time period, as a close, total return, we're talking 12% versus 8.63%.
Wow.
But that is not the only reason that I've been swapping some of this over. If you look at the payments over here, 82 cents, 87 cents, 92 cents, 85 cents, 76 cents, 81 cents versus the QQQI right here and 65 cents, 63 cents, 65, 65, 62, and 60. So I like the bigger payments is the reason why that I've been switching some of that, but there's more risk because leverage does work both ways.
Yep.
So if you compare it like this, you can see that when it goes down, the orange is the XQQI, when it goes down a lot further.
Right.
See, it went down 2% further right there. So, but that's why I've come up with the 4 horsemen, and now it's kind of like 5 horsemen, because I counted XQQI as one of the horsemen that I counted, and QQQI is the same. But we can compare them all the horsemen right here.
So Michael, you have one of these of your horsemen is has the S&P 500 as the underlying holding, but the other 4 are all NASDAQ. Do you prefer the NASDAQ or just ended up like this?
I did end up like this. I read a book one time, and it talked about Jack Bogle index fund investing.
Yep.
And he's the founder of Vanguard. And I've got a 5X on my money since I started using that strategy. So I'm very partial to that S&P 500. But this in recent years, the NASDAQ has outperformed the S&P. But this is only since XQQI has been out. So that's since February. It's a short window of time.
Right.
But believe it or not, in that window, TDAC, let me see if I can keep it steady. TDAC has actually outperformed even a leveraged version. But I'm not sure if that'll be that way over a longer period of time.
Yeah, it's hard to say, right?
Right. But look at that OVL. It's actually outperformed QQQI, which is incredible because one's a NASDAQ based, but that put strategies a pretty good strategy, to say the least.
Yeah,
and,
no kidding. That's pretty amazing.
Yeah, it's definitely. So that's why I have all these. It's, I like them all, truthfully, for different reasons. And OVL's great, and TDAC's great, GPIQ's great, and the QQQI and the XQQI are great in my opinion. So that's why I have all these, and we can kind of compare like against the QQQM, and which is the NASDAQ underlying on some of them, and it's hard to outdo the underlying, with a covered call fund.
Right.
But we'll see what happens. But right there, it's still pretty incredible because you don't have to sell your shares or anything. I like that part for sure.
Yeah. Yeah.
Not having to sell the shares. And I think people that have a lot of negative to say on passive income investing are not really, in tune to it. But I want to show you something here. I want to take all these out and go back to the OVL. And this kind of strategy does seem to outperform the underlying. And since it's been out, and that's like a 7-year window almost.
Yeah.
It's outperformed the underlying, which is hard to do. And I've heard that they may be coming out with an OVQ. And if that is the case, I think they filed for it. If that's the case, then that could be an interesting look on things. I might actually have 5 or 6 horsemen if that's the case.
And the nice thing is that if they do come out with OVQ, you could take all the distributions from your 5 horsemen and you can buy OVQ with that money. I don't have to sell anything to buy it, or you don't have to contribute more from your own pocket. So you got a lot of flexibility with income investing.
Yeah, definitely. And that's kind of what I've been doing, to be honest with you. I mean, like, you get $1,000 a week in an account in distributions on the average, then I can buy things that are, had pulled back or something, at that point. That's advantage to buy them.
Yeah.
Had an advantage to buy them. But that's what I kind of like about this kind of, strategy right here a lot. And so that's why I own all these, so.
Awesome. So for any of my viewers that are not already subscribed to Michael's channel, check out his channel, My Retirement Trading. I think you're putting out 2, 3, 4 videos a week now, which is amazing. And
yeah, I've been putting a lot out lately. So,
and he's got some good affiliate links if you guys are interested in stock analysis as well.
Yeah, they got a discount code of retirement if anybody's interested in stock analysis. And I do use it every single day, pretty much, just for, like I just showed right there. And I was going to say, they got some calculators and stuff on there, but it's one of my favorite for sure. And like I said, that this is just like what I'm doing in my account. So always do your own research and everything. But yeah, they're that's my five horsemen, and then I got satellites that I think me and Paul are going to discuss on a later date.
Yeah, we'll do
So
it. We'll do another video and we'll go over some of your other holdings. But just for everybody as well, Michael and I are both on Blossom. If you haven't already checked out Blossom, we'll have a link down below. It's free to join. And I always say it's kind of like the Facebook or Instagram of finances. So if you enjoy talking about finances, reading people's posts, sharing posts, all that kind of thing, it's a great social media app to check out for sure. And you'll find Michael. Are you on Blossom as Michael Brownstein or My Retirement Trading? How can they find you?
yeah, I got the best thing to do is go to my YouTube channel, My Retirement Trading, and just click the links on the bottom because I've got a lot. I've got it's at Michael Brownstein on Blossom, at M Blues Guitar on X, and then My Retirement Trading on YouTube. And I've actually got a newsletter which I'm very proud of, and it's I try to do it twice a week if I can, and so it's really I did a one that I released today. It's really in depth, and it's on NVII and what I think about that and everything, and my experience with it. So yeah, check that out by going to my channel, and it's a Substack newsletter at My Retirement Trading.
Yeah. There's a lot of people on YouTube talking about which funds you should buy, and they can compare this fund and that fund. But as you guys can see, Michael's putting $150,000 of his own money into these funds, so he really believes in them, right? I mean, it's not financial advice. He's not trying to tell you to do what he's doing, but I think he's putting his money where his mouth is. He's not just talking about funds for views. He's actually investing in these, and I'm pretty sure he's going to be retired in the next year or two, if not sooner.
Yeah, and the reason that I actually even started the channel was actually because I've seen people comparing funds and stuff like, what if you had 100,000 in this, blah blah blah, which is all great, but I've actually decided to share mine because I actually do have it in there, and you can see my ups and downs, and sometimes they don't pay as much as and sometimes they pay better, and
Yeah.
so it's sometimes I change my mind. Sometimes I love a fund, and then I find something that I like better, and but I like all these companies that we just went over as far as my personal taste, and like you said, I've got at least 150K in all of them except for the XQQI and QQQI. I believe I have over 150 between them, but not in one lump sum. So
Yeah. Well, you split the money between the two now, right?
right.
Yeah.
So
All right, Michael. Well, I appreciate you coming on. I'm pretty sure next week I'm going to buy some XQQI and maybe OVL. We'll see, but definitely going to add one of those to my daily snowball portfolio.
yeah, and I want to wish you a happy early birthday too while I'm here. So
Hey, thanks, Michael. I appreciate it. All right.
yeah, definitely.
All right, guys. This was Michael and Paul, and hopefully we'll be back again in a month to chat with you some more about our personal income investing journeys.
All
So
right, take it easy.
thanks, Michael. Take care, everybody. Bye for now.